Hello guys, this is FX Bright, the trade guru. So on this video I'm going to be teaching you guys more about the liquidity sweep. So this video is going to be like the part 2 of the first video. So if you've not watched my first video about liquidity sweep, you probably want to go into my channel and watch the video for yourself. Okay, the video is going to enlighten you so much on how to trade these liquidity sweeps. So on this particular video I'm going to be giving you guys more intel on how to trade or avoid the liquidity sweep, depending on you. By the end of this video, you're going to choose if you want to be trading this liquidity sweep or avoiding them, because to be honest, when you get into the market after a liquidity sweep, you are in for a stressless trade. But anyway, I'm going to show you guys how this works on this video, so please like and subscribe and turn on the bell notification. So I'll get right into it. What I want to show you guys is this. Now, I was given an instance using the double bottoms yesterday, and on my previous video, so I'm going to be doing that also right now. So imagine the market comes down, right? It comes down to a certain point, it goes up, and now this particular point has become a support zone. So what you'll be expecting for the market to do is to probably come back to this particular point, right? Then you can find a buy at this point, then it will go up again. So this is like a double bottom strategy, and like I told you guys, you can go to my video and watch how I trade the double bottom very accurately. So anyways, you find the buy at this point and you buy with the market, right? So this is conventional. This is how to trade it. But now what you will notice sometimes in the market is the market playing some type of tricks. So once the market goes down to this point, comes up, now in this journey to go back, what you will know, this is how you would use to understand that there is a potential for the market to have a liquidity sweep, is that as the market is probably coming down to that same support area, what you will find the market doing is that the market might start to range at this point, maybe forming a rectangle pattern or a triangle. So the market might begin to range, right? And because of this range, somebody will come and say, oh wow, I think the market has found a good support on this particular point. So the person now begins to plot a buy at this point. So the person begins to plot a buy. So the market gets to this point and most likely buys, right? So the person believes he has gotten into a trade where the market will probably start going up. But what you will notice is that the market will probably just make a little buy and drop all the way back down to that initial support zone that he was supposed to wait for. So what happened to the person here was kind of a trickery to make him think that the market is about to buy. So because he has entered his orders on this particular point, a buy order, the market deceives him, right? Deceives him and comes down all the way to hit his stop loss, because obviously he will put his stop loss somewhere below here, and the market comes down, hits the stop loss, and any other person who has their stop loss around this point, just to gain liquidity. So those particular places, I define liquidity for you guys in my other video, and I said liquidity is any zone where there are sufficient orders, right? So as the market goes up, comes down, and everybody is buying at this leg, so there's a lot of buy orders on this point. So this particular point becomes a liquidity zone. So once the market, and the stop losses are also somewhere around, so once the market comes down, it sweeps up all this liquidity. In other words, all the market orders that are around this point, it sweeps it up and finds a buy to the top. So this is how the institutional traders deal with the market, right? So how do you understand this liquidity, the potential for a liquidity sweep? The potential for a liquidity sweep will most likely arise when you can be able to spot for instance, a support zone. I'm still using the double bottom for explanation. So this is the market, right? So the market comes down, it goes up, it comes down again. Now you're able to confirm, and maybe the market starts going up. Now you're able to confirm that this particular zone is a good support zone by whatever means you use to confirm that. Now the market might probably go up and trying to come down again to this point. You're ready for maybe a buy if the market ever makes it. If the market ever makes it, if the market ever makes it to this point, so you're ready for a buy again. So what happens is that for you to know that a liquidity sweep is about to happen is on its way down to this point. What the market will most likely do is that the market will now begin to range. This range is to enable some people believe that the market has found a good support here so they can buy. Meanwhile, the market is just ranging to deceive them and eventually break down to the normal place where it's supposed to take the real buy from. So you get what I'm saying? So the way to understand and trade liquidity sweep is to identify a major resistance or a major support where the market is supposed to retrace to. Then look for a range. If the market begins to range just before the point where where you've mapped out. Guys, if you don't understand what I'm saying, don't worry. I'm going to get to the chart in a bit, but I just want you guys to get the concept of it. So if the market on its way down to a good support, on its way down begins to range like this, right? So it's trying to make people buy in it. Already you know that this particular point is supposed to be the support, but before it comes down to that point, it ranges as though it has found a support that will push it up. But what it does is that it just deceives people to take buys at this point so that it can drop down and hit their stop losses. In other words, if they are on a buy position, by hitting their stop loss, it means they have sold and they are selling at lower prices. So what the institutional players like to do is that they like to buy your goods at lower prices. That is hitting your stop loss. So you sell to them at lower prices until it get very low. So they buy all the goods at lower prices. And now, because they are now buying, the market shoots up with speed and they are buying with huge momentum. So let me get into the chart so we can see one or two things for ourselves and how this works. Now, this is volatility 100. Right, so if you look at this market very well, you see what the market is doing. Formed like a double bottom, right? So you can probably see how the market was able to come down, went up, and sorry about that, and comes down again and is about to go up. So what you will see is that let's throw for a bit. What you will see is that the market was able to find a support zone, at this particular point. So you can see the market was able to break this point, comes down for a retest, and it's probably about to go up. So now you can see what the market has been doing. But what you will find is that if we scroll for a bit, you will see what the market began to do. So the market came down again, made another touch, went up, came down again. So you can see the market has begun to range. It has already begun to range, in other words, finding tops and bottoms, right? So you can see how the market is ranging on this particular point in this particular time frame. So the market goes up again. So you can see that the market is just trying to range around this particular point. So what do you expect? You would expect that the market will, so what the people are expecting is that people will now come to this particular point and begin to infuse buys inside this particular point, right? So they are going to start buying and putting their stop loss just below the support zone, right? But what you would realize that the market has already begun to range, and anytime the market begins to range on a support, look below if you can see another support. And if you look just about below, you will see that there is a support just below this particular side. So you see how the market was able to come here, bounce, and it started ranging here. So because the market was unable to take this buy and is ranging here, you should be wary that the market will most likely drop down to find another support here, because this range that happens below, this range that happens just close, that happens on a support, Try to look down to see whether there is another support, because the market is most likely going to drop down. So you can see what the market was doing, still ranging on that spot and making people think that that is a very strong support. So they are currently infusing a lot of orders in this point. So some newbie traders, maybe they have even taken more positions on this point, believing that the market is going to find this place very strong, which it looks like it's currently doing, and push up a buy. But what you realize is that the market did a little bit of this and that, just try to make everybody fine and good. And now you can see what the market did. The market came all the way down to this second support, and everybody that was on this particular point, people that were on this particular point, they will probably have their stop losses here, 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 here. Like I told you, if you're on a buy position on this point, your stop loss is a sell order. So once the market players begin to push the market down, it means that you have started. Once they hit your stop loss, it means that whatever you bought here, you have sold to them here and on your stop loss. So you started selling at lower prices. So if you bought at this price and sold at this price, it means you've lost this amount from here to this point. Do you understand what I'm saying? So your stop losses are sell orders. So they take all the sell positions. That means that you sell to them, so they are buying all your sell positions. They are buying it, and at some point they buy everything. And because they are now buying and there is no more sellers, all of you that put your stop loss around this point, there's no more sellers, they bounce off quickly and the market changes direction all the way to the point where you thought you were supposed to go. So what you see is that when the market begins to range around a point, look down to see if there is another immediate support where the market is most likely going to go down to take these sell orders, which is called the liquidity sweep. I hope you understand this. So you can trade the liquidity sweep by avoiding these type of ranges. When you see the market ranging on this type of stuff, you just avoid and patiently wait for the market to make this break. Once the market makes the break, guys, if you infuse this place with a lot of buy pressure, you will be profitable. And that's how the market works, guys. So I'm going to give you more examples. And so, guys, take a look at this particular point. You will see what the market was able to do around this point. So the market was somewhere around here. It came all the way down, found a certain support here and started shooting up, right? Shot up all the way to this point and started dropping back down. So as the market is on its way down, before getting to this final, so people that are probably wanting to trade support and resistance are probably waiting for the market around this point, right? So we are supposed to be expecting that the market is supposed to drop down all the way down to this point. But upon getting to this point, what you see that the market comes down, goes up and starts ranging just close, to the point where it's supposed to come down. So you can see how the market was ranging. So I'm going to put this line here. So you can see what the market was doing. The market was just ranging on this particular point, ranging on, and did as if it was going to buy. So the guys that were buying at this point were joyed, they were joyed, right? So the market bought up a little bit, came down, and ranged for a bit. So once you're able to spot a certain support below a range, once the market is ranging, and you're able to spot a certain support below the range, you don't need to trade that range. That range is most likely going to be a trap. So what you do is that you wait for the market to break out from that range and make a retest on the main support you initially knew it was coming to, right? So because there will be a lot of newbie traders, a lot of people around this point buying this market here and putting their stop loss just below here. So the market has to fake them out to make them think that this is going to be a support. So once they are here buying, of course, they can trace this support to this particular point and see there's also support here. So there are supports here. So they feel like the market. But once you can see supports happening and the market is ranging just below a major support, you probably want to avoid this one and wait for that breakout. Once the market breaks out and touches this point, then you're going to see how the market is going to react. So let's see how this market went. So immediately the market broke down, killed so this break and, taking all the stop losses here is called the liquidity sweep. So the market was able to break down, and the moment the market broke down, entered, got to that place, and all what you saw was a very good buying pressure. So this is how you understand, how the market works. If you're able to find these ranges that happen just close to this matter, you can be able to just wait for the price to get to the real place after the range, and you'll be able to buy with the industry players. And this is how to trade liquidity sweep, guys. So I'll give a few more examples, and let's see how it goes. And so, guys, you can see this particular point in the market, this particular place, what the market was doing, how the market was able to, from this particular point, goes up, come down, and go up again. Like, so what some people might want to do, right? What some people, definitely not you, what some people might want to do is that they will come to this particular point. Now you know better, right? They might come, and this place is actually a support zone, right? A resistance zone. The market came here, found some good resistance, came here, found some broke it, and came down again. So what you saw with the market was that the market started bouncing, off this particular point. The market started bouncing off this particular point, going up, coming down, and bouncing. The moment you can see this range, you probably want to understand that this is a 15 minutes time frame. When you go to the 5 minutes time frame, you understand how this point was a massive range of the market. So once you begin to see this particular range, then you begin to become wary that the market is most likely going to find another support below. And if you just if you see what the market does, people that were able to buy at this particular point, thinking that the market has found a good support, will most likely put their stop losses just about below. But if you are the kind of person that want to wait for the industry players to do their thing, they're going to sell this market and make sure they get all the liquidity. And once it's down to a very good support, and if you draw a trend line on this point, you can see how that point was actually a support zone that was just waiting to happen. So this particular trend line, if you see how the market was able to react in these particular places, and also to this particular trend line. So you see that this point was actually there waiting, but the market, before it got to it, did some like kind of range so that some people might come here to try to buy this market at this point, because this is actually a good support zone. So they were able to buy and put their stop losses below, but the market just comes down, hit their stop losses, and got to the original place it was supposed to get to. And the next thing you can see is that the market is already flying up. So this is how to trade the liquidity sweep, guys. So I hope you do enjoy this video. Please like and subscribe, and like I said, turn on the bell notification. I'll see you guys in my next video.